If you own real estate in the Boise area or you want to own real estate in the Boise area, then this is the update for you. We have the market statistics through the end of July 2024, and here's the top 3 things you need to know about what's happening in our market. Number 1, inventory is actually flat. We were expecting it to go up. Number 2, pendings are up year over year. And number 3, I'm going to talk about what is going to happen with interest rates. Interest rates impact our ability to buy real estate and obviously the values of real estate. So I'm going to discuss what's going to happen between now and the end of the year and how it's going to impact you if you want to own real estate or you currently own real estate. So if you're interested in that, watch the rest of this video. All right, let's get diving in. If you watched last month's, thank you for being a loyal viewer. I actually made a prediction that inventory would go up because it typically does through, from June to July. We actually see inventory increase. Now, this red line represents active listings. If you watch these, we do this every single month. But we would typically see an increase from June to July. In fact, I did the math on last year's increase, 2023's June to July increase, and it was almost 13%. And as you can see here in July, we saw basically flat. We went from 1,070 listings to 1,068, so slightly down. But what that means, and I guess what I really want to make sure you understand is we are in an extremely rate-sensitive market. At the beginning of May, rates were almost 7.5%. We saw those, dwindle towards the end of May. There were 7.25. So inventory spiked, going into June, and but it is typical. We see inventory climb there anyways. And then June, we saw a little bit of June into July. We saw a little bit of relief. Rates were in the high 6s, 6.75 roughly. As I'm recording this today, it's August 8th, and now rates are below 6.5. We're 6.25 to 6.5. We're in that range. So if we are rate sensitive, and for that theory to be true, what we should expect is by the end of August, we'll actually see inventory stay flat or even come down. Normally it would go up. You can actually see, if you look at this, you can see we have 930 to 943. So that's up about 1.5% or so from July to August. So it's not huge, but we wouldn't typically see it increase or decrease. So if it decreases, then I would definitely suggest we are very rate driven. And I think we're rate driven anyways. That's just an obvious thing for someone like me and my team who's in the market, selling. We're going to sell 350 to 400 homes this year. Like, it is absolutely rate sensitive. But this inventory is being driven by rates. So what else do we want to look at? Well, we want to look at the pending home sales, and they're actually up. So let's take a quick peek here. Last year in July, we took 515 homes pending. And this year in July, we took 549 homes pending. And so we're looking at some decent momentum. There's still plenty of demand. In terms of our actual inventory, our months of supply, I'll show you one more shot here. We have 2.4 months of supply. And you can see based on the prices here, if you pause the video, you can kind of dig through. You can see from 250 to 300, we have 1.8, 300 to 350, 1.2. It's not until we get into the 5 to 600 that we get over into the 2s. So the lower price points are definitely still dominating in terms of, being able to sell quickly and get the asking price. As you're getting higher, you're starting to see a little bit of sitting. What's interesting as I stare at this here, even all the way up to 1 million, it's under 3 months of supply. 1 to 1.5 million is 3.9 months of supply. And keep in mind, somewhere between 5 and 7 months is a balanced market. Some of our peers here would actually argue that Boise's balanced market is more like 4 to 6 months. So with that knowledge, you could say, well, from 1.5 to 2 million, we're a balanced market. We have, right here, we have this 5 months supply from that 1.5 to 2 million. So that's a balanced market. And then, of course, over 2 million, we're into buyer market territory. But under 4 months of supply, we're still in seller's market territory. So essentially in our market, all the way up to 1.5 million, we're still very much in a seller's market. And I would also point out, when you go into the 1.5 to 2 million plus range, we literally only have 62 listings in all of Ada County on the resale side. So there's not a ton, guys. We have 1,068 listings total. So what is that, like 6%? Not even 5% of our market is comprised of these properties that are over 1.5 million. And so 95% of our market is a buyer's market, or seller's market, excuse me. And only 5% of the market is balanced or a buyer's market. So that's all about inventory. Let's talk about rates. I promised in the beginning of this video that we would discuss rates and what's going to happen. There's been a lot of movement in the Fed and jobs market, jobless claims, inflation data. We switched just from 2 weeks ago. So it's August 8th as I'm recording this right now. Just 2 weeks ago, they were predicting, some of the Fed chairs, active Fed chairs who are voting on rate cuts, predicted no rate cuts for the entire year. And here we are just 2 weeks later, and now they're predicting 3 to 5 rate cuts by the end of this year. And a lot of people are saying that we could see upwards of a 50 basis point cut as quickly as September. So the next Fed chair meeting is actually on September 24th. I've got this really cool tool here I'm going to show you guys. This is a CME Group, basically their FedWatch tool. So if you just Google CME Group, you'll pull it up. But it actually shows you the probability based on the way bonds are trading for what rates are going to do. And there is 100%. I mean, that's what this is suggesting. There is 0% that they're not going to lower rates come September 18th. So it's a 56.5% possibility that they lower the rate by 50 basis points. It's a 43.5% that they lower it by 25 basis points. So what does that actually mean for interest rates? Well, there's a couple things going on here. When the Fed starts to signal a direction they're headed with interest rates, it can provide a lot of relief for banks because they know that hikes are not on the immediate horizon. As of right now, until that happens, there's still the possibility of hikes. And they have what's called basically like the rate they're paying the Fed to borrow the money, and then they have their padding on top of that. And that's typically the standard's like 1.75% over. But right now it's been closer to 2.5 to 3%. And a lot of that's because of the uncertainty with the Fed. If they start lowering rates, you can see a pretty major pullback in mortgage rates. If that is to happen, just because they'll lower that, what they call a treasury spread. They'll lower that spread that they charge above and beyond the money they're borrowing. And, that could provide a lot of relief. Plus, the actual rate itself goes down at which they borrow money, which can also provide relief. Now, the 30-year mortgage is more closely tied to the 10-year treasury note. And that's what we kind of watch. If you want to Google that, you can kind of see what that does every day. It is a great indicator of whether or not rates are going to go up or down. So let's see, 10-year treasury yield. We'll pull up this little chart here. I look at this quite a bit. And this will actually give you an idea. We'll pull up the last week. We were at as high as 4.6. Oh, that's too far. That's a year. We'll pull up the last month. Sorry. We were as high as 4.286 on July 23rd. We got down to as low as 3.79. So now it's at 3.99, and that's what we're actually seeing this follow. Oh, I realize you can't see that. Sorry. Here's the rate right here. So as high as 4.286 3.286 and then as low as 3.796. But that's what the mortgage rate typically follows, and they have a treasury spread above and beyond that. I am predicting you'll see rates in the high fives by the end of this year. We're already seeing rates that way, by the way, for VA loans and FHA loans. But your conventional mortgage rate right now is somewhere around 6.25 to 6.5. So I would suggest by the end of this year, we'll see those conventional rates be between 5.75% and 6%, which would be a lot of relief. And if we are as sensitive to rates as I believe we are, come next month and we'll see how right or wrong I might be depending on the inventory levels. But if inventory continues to go downwards because of this relief on rates, you can just do the math, right? A lot of buyers are going to come out of the woodworks as rates go down, which is going to drive inventory down, which ultimately drives prices up. At the very least, pricing will be stable. So what does that mean for you today? Well, if you're waiting for rates to drop and drop and drop, it's going to have an inverse relationship on prices. So rates are coming down. I predict prices to go up while that happens. How much are you actually going to save? That's a math problem. I think you should reach out to your favorite agent at City Trees Real Estate, and they can help you with that math problem. Feel free to reach out in the comments on YouTube, or you can reply to this email or wherever you got this from. We'd love to answer your questions or help you with your specific situation. A lot of people have a lot of moving parts, and it's good to talk through the options. Here at City Trees Real Estate and Living Select, we advise, but ultimately you're going to direct. So we really want to make sure you know all of your options available, and then ultimately you can direct how you want to move forward. So appreciate you guys watching and sticking for the entire video. Hope you enjoyed it. Hope you learned something. If you do want access to this data right here, we have this for all the counties in and around the Boise area. So Ada County, Canyon County, Elmore County, Gem County. We've got all sorts of data for you. If you guys want access to this, reach out to your favorite City Trees real estate professional or Living Select agent. We can help you out. Thanks, guys.